The 5-year Treasury started the week at 432 and the 10-year at 431. Now, the January inflation report caused rates to spike, and the Fed speak last week has kept them elevated. This week, we'll get another Core PCE report along with a slew of Fed speeches. Now, I'm sensing that the market is already feeling a little deflated over interest rates the last few weeks, and certainly we all started getting used to the idea that rates were going down in 2024, a notion I'm still feeling good about. But don't be surprised if we get another slightly elevated report and the Fed starts screaming from the rooftop, inflation is surging again, inflation to the moon, and maybe even rates are never going down again. The Fed might say that, the media might say that, but let's take a little walk down history lane to paint a more reasonable picture, because it's not unusual to have higher readings at the start of the year. Think about it. How many employers give raises in January? How many manufacturers establish higher prices at the start of the year? As an example, December 2022 CPI month over month was 0.1%, and then January was 0.5%. For the year, CPI still fell from 6.4% to 3.4%. In December 2022, PPI month over month was 0.3%, and January was 0.4%. For the year, PPI still fell from 8.8% to negative 0.1%. Not only that, but the 10-year Treasury dropped 70 basis points just 6 weeks later. So my opinion, which I know doesn't really matter in the scheme of things, is that we need more data before making any decisions about inflation accelerating. I know that sounds a little bit like the Fed, but I'm definitely not Jay Powell, and I definitely don't think like him. My thinking is that you need a few more months of data rather than taking the January data, which is historically seen to be elevated, and trying to say that that's now causing a reacceleration of inflation, which I think most of us know that's not true. So the same is true with jobs, though. In December 2022, job gains were 136,000. In January 2023, they were 517,000. Now, for January of this year, job gains came in at 255,000. About half of the January print. So all hope is not lost. Inflation will likely continue to moderate. In fact, Dr. Anna Wong, Bloomberg's chief economist, is still forecasting core PCE to fall to 2.5% by June. Now, despite the predictable jump in inflation, this has, for the most part, ended all hope of a rate cut in Q1. The theme for 24 appears to be lower but slower. So this week, like I said, we get another core PCE reading along with lots more Fed speeches. Now, as for interest rates, even with treasuries elevated 25 to 30 basis points from a few weeks ago, most of our lenders have increased rates 10 to 15 basis points, which means that they've thinned out their margins. And in some regard, I expect that they're waiting to see how this data plays out in February before making any rash decisions to hike rates. Lenders are still looking for more conservative deals with strong, experienced borrowers. So it's funny because this time of the cycle, I still get these calls of people trying to get, 100% financing on apartment buildings, or somebody with bad credit who's trying to buy an apartment building with, 10% down or something like that. So, or new people trying to get into the business here. Now, it's not to say that if you're a new person that has a good job and has a good credit that you can't buy a property. It's to say that they do take that into account when looking at your experience. So generally speaking, we're seeing that the multifamily market is stable, but we are seeing downward pressure in the office sector, a little bit of industrial as well. And you're going to see, well, if you look at social media or you look at YouTube or any of that stuff, you're going to see all these crazy headlines about how, commercial real estate prices are going to be tanking and things like that. And I don't disagree with that, but as you know, there are many, many different sectors in real estate. So that will be, in my opinion, heavily weighted, and has shown already to be true, much more heavily weighted in office. Like I said, retail, and in past videos, retail is doing really well, and multifamily is stable. Are we seeing prices go down? Yeah, a little bit. So I do anticipate that that's going to continue throughout the year if this lower but slower trend continues to play out. But that being said, I do still think that we'll get the Fed rate cut, in June, regardless of this data coming out. We've definitely, at least, thank God, have a few more months of data to come out that will hopefully prove this theory wrong of reacceleration of inflation, or at least ease the Fed's worries. So if you guys have any questions or you're looking for any financing, it is so deal specific and borrower specific right now. So definitely do call for a quote. Again, if I've given you a quote in the last few weeks or even a month, it's definitely time to get that updated, because lenders' appetites are changing all the time. They're changing their spreads, they're changing rates, they're changing the way that they look at things. So this is very much a moving target, and has been for the last year plus, maybe year and a half or year and a quarter. So anyways, have a fabulous week, you guys, and reach out to me if you have any questions.